In the pursuit of financial freedom, you have always been told to invest, whether in stocks, bonds, real estates, cryptocurrency, or even the most recent NFTs. But no one really talk about how to start for beginners, and it can be a really steep learning curve for those people who do not have any sense of financial knowledge at all. So in this video, I'll walk through how you can start as a beginner, taking small baby steps to financial independence. Hey guys, welcome back to Honey Money SG. My name is Christopher, and in this channel we help people build their financial knowledge, teach money saving hacks, and also help to lead a fulfilling quality of life. So if you are new here and these topics interest you, consider subscribing. As usual, disclaimer before we start, this video is just for education/entertainment purposes only, based on my personal experience. Nothing here constitutes as financial advice, and you should seek a certified financial planner to help provide a balanced opinion. So coming up, the options discussed today are really basic, nothing complicated about it at all, and no previous financial knowledge required. The only thing I need from you is your motivation to achieve more wealth for your retirement years, and also your help to like this video at the bottom below. Smash it! Okay, first thing, what is investing? Basically, investment means that you are putting money into a financial product like your stocks or in your bonds, or even physical assets like a real estate property, with the expectation of generating an income or profit in the long term. And you're expecting the price of this investment to go up over the long period of time. We call this price appreciation. So the goal of investing is very simple. You allocate resources to an investment that you believe in, watch it grow over time and price appreciates, and then sell it off when you need the money. This is similar to growing a tree. You need to plant a seed and nurture it for 10 years. Flexing my Chinese here again. 10年树木，百年树人. It takes 10 years to nurture a tree, but 100 years to train a man. This can also be applied to investing as well. We need to look at the long-term prospects. With that, let's move on to level 1 of investing, the regular savings plan. First thing first, this is not to be mistaken with the endowment savings plans sold by insurance companies. The regular savings plan, or RSP, is a financial product offered by financial institutions like banks that allows you to contribute a small amount of money every month to buy into assets such as stocks, exchange traded funds, and unit trusts. So typically in the RSP, you will trust that the financial institutions acts in the best interest of you. There's usually no customization based on your preference of risk or markets involved. If you live in Singapore like me, you can start from as low as $100 a month with 1% commission. The RSP makes use of dollar cost averaging, or DCA, effectively. So that means you put in a fixed amount of money every month. When it's expensive, it will buy lesser units, and when it gets cheap, you can actually buy more units for the same amount that you put in. So in that way, you are not timing the market at all, because time in market is better than timing the market, which means it is difficult to buy low and sell high consistently over the long term. If you are living in Singapore like me, you can start from as low as $100 a month with 1% commission. So you can take a look at DBS Invest Saver, OCBC Blue Chip Investment Plan, and also FSM1. With that said, the risk level of RSP is relatively low, but the returns will be quite low as well, because the rate of return is usually related to the level of risk that you are willing to take. Next up, let's move to level 2, robo-advisors. Robo-advisors is a relatively new concept, similar to the way RSPs work, except that they are able to customize your risk tolerance, your preferred markets, and even your stock versus bond percentage allocation. Robo-advisors will use your money deposited to buy into market funds, unit trusts, and exchange traded funds based on a fixed allocation percentage. This will help you diversify across different portfolios in the world despite having just a very small amount deposit. Robo-advisors also offer quite a number of financing options. You are able to invest using cash, SRS, or CPF. For my US-based viewers, SRS is similar to your Roth IRA, and CPF is similar to your 401k. So imagine being able to invest your pension funds into a robo-advisor. Robo-advisor fees are generally at the range of 0.8%, slightly cheaper than what the RSP is providing. It also makes use of dollar cost averaging effectively so that you can optimize your time in market without worrying about the ups and downs. So for my Singapore viewers, examples of robo-advisors would be Syfe, StashAway, AutoWealth, and Endowus. Personally, I use Endowus because they are one of the cheapest and the better service ones, and you can refer it to my video over here so I can show you how to use Endowus. For my experience, the risk of robo-advisors is between low to medium, and the returns is medium. So it's good for the general public who want to do investments with a tinge of slightly higher risk. Moving up to the level of level 3, we have index ETF investing. The ETF stands for Exchange Traded Funds, and it is basically a mixture of different companies being allocated into this exchange traded fund. So you are investing in the broad market across different companies, and that provides a high level of diversification. And in order to start, you will need to open a brokerage account to buy in such ETFs. If you don't know which brokerage to use, I can recommend Interactive Brokers, Tiger Brokers, and Moomoo Brokers. Links in the description below. And then the commission fee will depend on the brokerage used. You can also check out my earlier video here where I talk about expensive brokers versus cheap brokers. So for index ETF investing, you need to buy into the stock ticker manually and regularly. If you like to buy in the S&P 500, which represents the 500 strongest companies within the US, then you can look for stock ticker symbol like VOO, SPY, or CSPX. And then if you prefer a world index ETF, you can look at the stock ticker IWDA or VWRD. Now the good thing about index ETF investing is that you are investing in the market, so you don't have to worry about the company doing badly in the recent financial update, because poor performing companies will be kicked out by larger and stronger companies that can replace them. So you can take your mind off portfolio rebalancing and reviewing financial statements of each individual companies. Of course, with that, the risk level of investing in index ETF is around medium, while the returns will be actually medium to high, slightly higher than robo-advisors. And also, you do have to regularly invest your funds manually in order for dollar cost averaging and time in market to work. So we have mastered the 3 levels of beginner investing. I'm going to give you a bonus level. This is called stock picking. Stock picking basically means that you are able to have conviction on this stock and you'll buy it regularly because you believe the company would do well over a long period of time. You should only start stock picking when you are comfortable and confident of your investing strategy, because you will need to read a lot of financial news and business updates, keep up with the news across the world, and also think about the long-term prospect of the company, because this will help you build the conviction that you have in this company, and you trust the company management will help to steer the company to a long-term growth and innovation. Having that strong conviction in the stock will help keep your mind at ease when there is a market-wide correction leading to a downfall in prices, and that you will not be tempted to sell as what others do sell in fear. So there is potential to beat the market returns of 7 to 8% in the S&P 500 index, that is in the bull market. But also stock picking can also make you lose more than the market during a correction or a bear market. So the risk level of stock picking is really high, but the returns are high as well. Okay, wrapping up, so I've gone through the beginner strategies to how to invest and also given you a bonus level of how you can advance to stock picking. Like I said, 10年树木，百年树人. Investing is a long-term process, so you really need many years of experience to really find out your investing strategy and be confident and comfortable in what you are investing in, so that you will not panic sell when there is a market-wide correction. So I hope you have learned something new and found value in this video today. Do like and share this to your friends and family so that they can benefit this as well. Subscribe to the channel if you haven't so that I can have more useful reviews like this. Check out my other videos here where it can help you build your financial independence journey. My name is Christopher. This is Honey Money SG, steering young adults to financial independence.